Look at the applause ma'am got. It says everything.
I'm very honored to be here this morning to share the dais with all of you and also to represent what the industry is going through and what is it that we really need to grow in this industry. And Praveen Garu explained at length how chit fund industry has been the backbone for several years to many big industrialists, but the truth is that it has led to the survival of the common man, the small and middle class people, the farmers and traders by and large. We all know that chit fund is the oldest indigenous financial institution. They uniquely combine savings and borrowings and have become a lifeline of financial inclusion for millions who lack easy access to banks. Despite their significance, the industry faces regulatory and operational challenges that need urgent redressal. Chit funds are not just a financial tool, they are a community institution rooted in trust, serving rural households, small and medium entrepreneurs, and urban residents alike. Our task today is to explore how we can safeguard this legacy while modernizing for the future. The key challenges and proposed solutions. We have a section 16 in the Act. I'm delving more with the Act since we have all the IAS officers whom we can let them know what the difficulties are and how they can help us out. I believe, sir, the Act, which was a 1982 Act, predominantly was made to serve companies which just had, not even companies, maybe individuals who are running the chit fund companies, just having one chit that they were operating. But today, number of proprietors have turned firms, limited companies, and many companies are conducting probably more than 20 groups, 50 groups, 100 groups. And we at Margadarsi have more than close to 6,000 groups going on amidst all the 4 state operations that we do. So it is time that we really look into the Act, because our country, which is aspiring to become the 3rd largest economy in the world, outbeating even Japan, I think almost one day we crossed their GDP, and probably every other day we are both competing there, but crossing even Germany and trying to be the 3rd economy by 2030. And India being a bustling nation of billions of digital transactions, why only chit fund industry is left behind, sir? So we kindly request you to look into it and help us out so that we can also be, as an industry, be given fair chance to survive in this digital world. So section 16 talks about in every auction 2 subscribers being present. These days nobody has time, they all want to operate electronically. So if this can be changed to digital participation, where people can participate online auctions, it will help the subscribers and reduce the operational burden. In fact, in the last 2-3 auctions, nobody is there to participate at all. So how can we expect anybody to be present? So the Act itself is violative for the last auction, because last auction there will be only one person, so how can 2 people be present in the auction? So when it comes to section 20, sir, it talks about 50% fixed deposit and 50% bank guarantee, which also becomes operationally inconvenient. We would prefer probably 50%, not 100%, the AP government, the AP state had 50% chit security deposit until the Central Act was enacted. So if we can recall that and make it 50% fixed deposit, and that too instead of taking the, at the time of taking the prior sanction from the registrar, if it can be at the time of the commencement, then it will ease on the liquidity of the chit fund companies and they would be able to make faster payments to the subscribers, sir. And when we look at the section 20, subsection 5, it talks about where a chit is terminated and the registrar has satisfied himself that claims of all the subscribers have been fully satisfied, he shall order the release of the security furnished by the firman. The current issue is, sir, lack of clarity delays release of security when subscribers don't claim price amount. Very rarely we conduct, like say, maybe 25 chits. There will be one subscriber who is not able to give the security. And sans the security, we cannot release the price amount. Such price amounts get transferred into number 2 account and it is there. And we only adjust that amount towards the arrears in that chit once in 6 months. And if there is any credit left after the chit is terminated, we make the payment to the subscriber. So this can be looked into by the registrars and release our fixed deposit amount once the chit is terminated. Because a subscriber who has not taken the price amount will not be giving us the no claim letter. So there is no way we can produce a no claim letter of a unpaid price subscriber. And we would like to follow the act in toto in order to be 100% compliant. So balance sheet, the Companies Act itself gives 6 months, whereas in the chit fund rules it says balance sheet should be filed within 3 months, which is so unwieldy to do because the bankers themselves with whom the fixed deposits are kept, they don't give us the receipt information, the interest postings until it is June. So once we get the information, we have to verify all that, and then there will be some wrong postings. We have to get that rectified. All of that has to get reflected in the, in the balance sheet. So this year we really struggled to see if we can complete it in 3 months. Day and night our accounts team has worked in all the 4 states, but still, it took 5 months. So we are able to comply with the Companies Act, wherein 6 months time is given. So something needs to be done about this also, sir, so that it reduces compliance stress and harmonizes regulations. And largely the other bottlenecks are still being very much manually compliant with regard to documentation. Lot of manual filings are there, which we would like to go forward with digital compliance, which makes it easy. Even the registrar would know everything online. There will be dashboards which can be seen by the registrars. Everything will be much more transparent is what I believe in. And Margadarsi Chit Fund is totally moving towards digital operations. Another bottleneck is the delayed security deposits, release of them. Sometimes even after 3 months, 6 months, they are not released, which tightens the financial situation of a chit fund operator. And prolonged legal disputes, which hampers the efficiency. One of the reasons why probably very rarely not organized chit funds, of course this can happen only to organized chit funds, very rare because the percentage is almost nil, but it can go wrong because of not able to recover rather than doing business. If anybody fails, it is because of failure to recover the dues from the defaulted subscribers. So the most important thing is, sir, about the GST rationalization. Why are chit funds being charged 18% when banks, NBFCs are not charged anything on the interest earned by them. For us, the income is the commission, and for banks and NBFCs, it's the interest. There's no GST charged for that, but whereas we are being charged 18%, which is, looking at us like apples and oranges, differentiating us like apples and oranges. So kindly, sir, we seek your intervention, we seek your help in rationalizing this and making it impartial, sir. And also people like Margadarsi, firms like Margadarsi, where we are operating in different states, we have different rules, every state, different fee structure, different practices, which create inefficiencies and procedural hurdles. So to develop a model chit fund rules for nationwide adoption to bring in consistency would be the best. These challenges affect not just businesses, but the very trust of subscribers who look to chit funds as their safety net. Digital transformation, the requirement of physical submissions for regulatory approvals, I'm just insisting upon that, slows down group commencements, reduces ease of doing businesses. Introduce secure e-filing for chit agreements, minutes, returns and fees, along with online payment facilities to reduce cycle time, improve compliance and enhance transparencies. Promote online auctions and digital collections for convenience and trust. I've covered about the judicial disputes, I'll skip that. Just one thing is, when defaulted subscribers are going for appeals, please insist upon at least 25% remittance so that frivolous litigation can be avoided. I lost it on my iPad, so I'm just looking up here. And also we need to curb unethical competition. So proliferation of unregistered chit operators undermines trust, exposes subscribers to the risk of losing their savings and damages confidence in the entire regulated industry. So curbing unregistered operators is very, very important. Strict enforcement penalties when people are found to be operating unregistered chits, and bringing about public awareness campaigns to protect subscribers from fly-by-night operators. So we have huge opportunities ahead. Beyond addressing challenges, the sector is poised for growth if supported by enabling policies. Financial inclusion, reach undeserved segments with simple community-based chit groups which can be operated in rural areas and inculcate a saving culture. Promote chit funds as a disciplined savings tool for the younger generation. As I conclude, sir, chit funds are at a crossroads. Over-regulation and unfair competition currently impede growth, and targeted reforms and modernization can unlock the sector's full potential. By embracing digital transformation, ensuring regulatory balance, and curbing unregistered operators, chit funds can emerge stronger than ever. Thank you so much.